Imagine a world shimmering with newfound wealth, where the American dream felt not just possible, but inevitable. The 1920s, the Roaring Twenties, a decade of unprecedented prosperity. Jazz music spilled out of speakeasies, skyscrapers clawed at the clouds, and on Wall Street, a relentless bull market charged forward, seemingly unstoppable. Everyone, from industrial tycoons to waitresses and shoeshine boys, was buying stocks. It was the golden age of speculation, a time when fortunes were made overnight on borrowed money and boundless optimism. The stock market had become the nation's favorite pastime, a symbol of endless growth. But beneath this glittering surface, the foundations were cracking. The prosperity was built on a fragile house of cards, propped up by risky credit and a dangerous belief that the party would never end. And then, it did. This is the story of how that dream shattered, not in a slow decline, but in a catastrophic implosion that began on one single fateful day. It's a story of power, panic, and a hidden truth that reshaped the course of modern history. This is the story of Black Thursday. The morning of October 24th, 1929, dawned cool and clear in New York City. On Wall Street, the bronze statue of George Washington seemed to look down with an air of stoic calm. But inside the grand halls of the New York Stock Exchange, the atmosphere was anything but calm. An uneasy tension had been building for weeks. The market, after its meteoric climb, had started to wobble. Prices dipped, recovered, then dipped again. Analysts called it a healthy correction, a momentary pause in the ascent. But seasoned traders felt a tremor of fear, a primal instinct that something was deeply wrong. When the opening bell rang at 10 a.m., that tremor became a full-blown earthquake. There were no buyers, only sellers. A tidal wave of sell orders flooded the trading floor. The ticker tape, the machine that printed stock prices, couldn't keep up. It began to fall hopelessly behind, printing prices that were already ancient history. As the tape lagged by 15, then 30, then 60 minutes, a terrifying information vacuum opened up. Traders on the floor saw the unfolding disaster firsthand, but the rest of the country, the millions of small investors who had bet their life savings on the market, were flying blind. All they knew was that the numbers on the ticker were plummeting. The psychological effect was devastating. Imagine watching your life savings, your hopes for the future, evaporate into thin air, and you can't even get an accurate price for what you own. Panic, raw and contagious, swept through the exchange and across the nation. The system itself was breaking down. Telephone lines were jammed as frantic investors tried to call their brokers, screaming, "Sell, sell at any price." The telegraph system, the backbone of financial communication, was overwhelmed. The very technology meant to bring order and efficiency was now amplifying the chaos. It was a digital age collapse in an analog world. By 11 a.m., the market was in a state of freefall. Billions of dollars in paper wealth had vanished in the span of a few hours. The noise on the trading floor was a deafening roar of shouting, desperation, and disbelief. Men wept openly. Fights broke out. The carefully constructed edifice of financial confidence had crumbled into dust. Outside the exchange, a crowd began to gather on Wall Street, their faces a mixture of fear and morbid curiosity. They stared up at the windows of the big investment banks, as if waiting for a sign, for savior. Rumors, wild and unsubstantiated, spread like wildfire. One particularly dark rumor, which would later be exaggerated but captured the mood perfectly, was that executives were jumping from the windows of their high-rise offices. The psychological break was complete. Amidst this pandemonium, the most powerful men in American finance gathered for an emergency meeting. J.P. Morgan Jr., the heir to a banking dynasty, convened a council of the top bankers at his office at 23 Wall Street, right across from the stock exchange. The fate of the entire American economy now rested in the hands of this small group of men. They understood that this was no longer just a market correction. It was a crisis of confidence that threatened to bring down the entire banking system. They needed to act, and they needed to act decisively. Their plan was a bold and perhaps arrogant display of financial firepower. They would pool their resources, a staggering sum for the time, to create a fund to buy stocks. Their goal wasn't just to make money, it was to stage a public and dramatic intervention. They needed to show the world that the big money was stepping in, that the market had a floor. They chose one man to be the public face of this operation, Richard Whitney, the acting president of the New York Stock Exchange. At 1:30 p.m., a path was cleared through the chaotic trading floor. Richard Whitney, impeccably dressed and projecting an air of unshakable confidence, strode to the trading post for U.S. Steel. In a loud, clear voice, he placed a massive bid for 25,000 shares at a price well above the current market level. It was a theatrical gesture, a declaration of war against the panic. He then proceeded to do the same for several other key blue-chip stocks. For a moment, it seemed to work. The market, stunned by this show of force, paused its descent. Prices began to tick back up. A wave of relief washed over the floor. The banker's gambit appeared to have succeeded. By the end of the day, the market had recovered a significant portion of its losses. The newspapers that evening hailed the bankers as heroes who had averted disaster, but the relief was temporary. The intervention was like building a sandcastle against a tsunami. The bankers had managed to plug a hole in the dam, but the pressure was still building. The fundamental problems, overpriced stocks, excessive debt, a weak banking structure, had not been solved. The fear, though momentarily suppressed, was still there, lurking just beneath the surface. What many people didn't realize at the time, and what has become a subject of intense historical debate, is the role one powerful individual might have played in sparking this initial blaze. While the crash was a complex event with many causes, some evidence points to the actions of a single influential financier. This man, operating from the shadows, saw the market's fragility. He understood that the pyramid of credit was about to topple. In the days leading up to Black Thursday, he allegedly began to quietly, then aggressively, unload his massive stock holdings. His selling created downward pressure, which spooked other large investors, who then started to sell their own shares. It was like a single stone starting an avalanche. This wasn't just about taking profits. It was a calculated move based on a deep, cynical understanding of market psychology. He knew that once the panic started, it would feed on itself, creating a self-perpetuating cycle of fear. His decision, made in a private office far from the screams of the trading floor, may have been the invisible hand that pushed the first domino. Whether his actions were a deliberate act of market manipulation or simply a savvy, self-interested move remains a point of contention. But it highlights a terrifying truth about our financial systems, that the decisions of a very small number of powerful individuals can have catastrophic consequences for millions. It's a story of how concentrated power, combined with greed and ambition, can destabilize the world. The brief recovery on Thursday afternoon was a mirage. The following Monday, the selling resumed with even greater ferocity. The bankers, having spent a fortune on their initial intervention, were now unwilling or unable to step in again. Then came Tuesday, October 29th, 1929, a day that would forever be known as Black Tuesday. On this day, the market collapsed completely. The last vestiges of hope were extinguished. The losses were astronomical, wiping out a decade of prosperity in a matter of days. Black Thursday was not the end, but the beginning. It was the first violent spasm of a much deeper economic illness. The crash shattered public confidence not just in the stock market, but in the very institutions of American capitalism. The banks, the corporations, the government. The credit that had fueled the boom evaporated overnight. Businesses, unable to get loans, shut down. Factories fell silent. Unemployment soared. The financial crisis soon morphed into a full-blown economic catastrophe that we now call the Great Depression. The Roaring Twenties had ended not with a whisper, but with a deafening crash, and its echoes would reverberate around the world for the next decade. Looking back, the story of Black Thursday is a chilling lesson in the psychology of greed and fear. It's a reminder that markets are not just driven by numbers and balance sheets, but by human emotion. It reveals how quickly confidence can turn to panic, and how interconnected our financial world truly is. The communication systems failed, but the real failure was one of imagination, the inability to believe that the good times could ever end. The events of 1929 forced a reckoning. In its wake came new regulations, like the creation of the SEC, designed to prevent such a disaster from happening again. But the core question remains, did we truly learn our lesson? Or did we just rebuild the system with more complex but equally fragile components? As we look at the financial crises of our own time, we see the same patterns emerging. Speculative bubbles, excessive debt, and the dangerous belief that this time is different. The story of Black Thursday isn't just a chapter in a history book. It's a timeless fable about the nature of money, power, and human fallibility. It asks us a fundamental question. Have we mastered our financial creations, or have they, in the end, mastered us? The answer, it seems, is still being written. Thank you for watching. If you found this story as fascinating as we do, please consider liking this video and subscribing to our channel for more deep dives into the events that shaped our world. We'll see you in the next one.